Hello everyone, welcome to JAIIB CAIIB English Medium. This side Aarti, and finally we are very close to our JAIIB October exams. So today we are going to attempt our Module B numerical one shot. In this we are going to solve a number of questions related to mainly Companies Account 1. Because Companies Account 1 is quite difficult, quite tough, and that unit is very important for you. Not only that, we will be covering apart from Companies Account 1, other units also. But remember, before we start, do subscribe to this channel because this channel will be helping you with the marathons for your JAIIB. And do like this session and share with your friends and colleagues so that they also can get the benefit of this one shot. Chali. So first of all, please clarify me that my audio, video all good so that we can start today's session. I hope my audio and video all good. Chaliye, so I think we can start today's session. Yes. So, with this, let's start our today's session with our first question. It is a company ABC Limited has an authorized capital of 10 lakh divided into equity shares of 10 each. The company has issued 50,000 equity shares which have been fully subscribed and paid up. During the financial year, the company decides to issue 20,000 additional equity shares at a premium of 5 per share. Which of the following statements is correct regarding ABC Limited after this issuance? Options are here. A. The issued capital will increase, but the authorized capital will remain the same. B. The authorized capital will increase and the paid up capital will also increase. C. The issued capital will remain the same, but the authorized capital will decrease. Fourth, the paid up capital will remain the same after the new shares are issued. So in this, they are asking related to authorized capital, issued capital. So what are these authorized and issued capital? Can you tell me what do you understand with the term authorized capital? What do you understand with the term authorized capital? Authorized capital? Can anyone tell me? At this point of time, you need to answer. This is not your conceptual class. This is your revision class. This is your confidence class through which you are going to evaluate yourself that how much are you ready or not for your exams. For this class is there. Chali, tell me, what do you understand with the term authorized capital? So authorized capital is the maximum amount that company is going to issue. Okay, this is the maximum limit. That is 10 lakh. In this, we have seen the next issue, that is your issued capital. So authorized capital is what? Authorized capital is your maximum limit that company can raise. Correct? Issued capital, as company will not issue all this authorized capital. So they are going to use some portion of this maximum capital, that is your issued capital. And when investors are subscribing to this issued capital, that is your subscribed capital. Correct? And if subscription is in installments, then there comes your paid up capital. Okay, so these are the 4 different type of capitals in your shares. Authorized capital, issued capital, subscribed capital, and called up and paid up capital. Okay, if anything is left, if companies are calling in installments, then there will be one called up capital also and paid up capital also. Okay, but in this, they are not asking about paid up and called up. They are focusing on these 2 type of capitals only. Authorized and issued capital. Remember, company cannot issue more than their authorized capital. That is the point here. So, chali, let's see the authorized capital means maximum capital they can raise is rupees 10 lakh. Okay? This is the maximum limit. in the second line, they are saying the company has issued 50,000 equity shares. Means company already issued how many equity shares? Company already issued 50,000. And at what amount? At 10 each. So into 10, which is equal to how much? 5 lakh. Correct? This is equal to 5 lakh. But after some time, during any particular financial year, the company decides to issue 20,000 additional. Means this is the first issuance of 50,000. Next, they are all going to issue 20,000 shares more. But in that situation, they are saying that additional equity shares at a premium of 5 per share. Means they are going to issue for 10 plus 5. Can you tell me what is the total amount they are going to raise in their second issuance? That is 20,000 into 15. That is your 3 lakh. That is your 3 lakh. Correct? Now in this, can company is allowed to issue shares at premium? Tell me. Can companies can issue these type of shares at premium? Are they allowed to issue these type of shares? Yes or no? Companies are allowed to do this? Tell me. Can company issue shares at premium? Yes or no? Yes or no? Companies are allowed to issue at premium, but they cannot issue at discount. Do you know this is very important point? The companies can issue shares at par, they can issue at premium also, but they cannot issue discount. Except, do you know which shares we can issue at discount? Tell me. After a week, we are going to give our JAIIB exams. Tell me, what type of shares we can issue at discount? What type of shares we can issue at discount? No answer. So let me tell you, we can only issue shares at discount when we are issuing to our own directors, to our own employees. Correct that? Sweat equity shares. Sweat equity shares are only the type of shares which are issued at discount. Apart from that, Companies Act 2013 restricts that no one can issue at discount any shares. Okay, I am talking about equity shares. Okay, chali, let's back to our question. So in this, what they want, which of the following statement is correct regarding ABC Limited after this issuance? Means total issue is how much? 8 lakh. Correct? And your authorized maximum capital is how much? 10 lakh. So as per this, which statement is correct? Which statement is correct? Issued capital will increase, authorized capital will remain the same. B, authorized capital will increase, paid up capital will also increase. C, issued capital will remain the same, but the authorized capital will decrease. D, paid up capital will remain the same after the new shares are issued. So at this point of time, if you see the fourth option, paid up capital will remain the same after the new shares are issued, that is totally false. If you are issuing new shares, your paid up capital will also increase. Correct? So this is wrong statement. If you see the third statement, the issued capital will remain the same, but the authorized capital will decrease. Why authorized capital will decrease? That is the maximum limit. You cannot change all of a sudden this authorized capital unless and until you take the permissions. Okay, unless and until you pass your respective standards. So this statement is also wrong, that issued capital will remain the same. Why issued capital will remain the same? Before it was around 5 lakh. Now after issuance of equity shares at premium, your issued capital is also increasing by 3 lakh. So this statement is also wrong. If you see the B statement, the authorized capital will increase and the paid up capital will also increase. We are not increasing our authorized capital. Authorized capital is already 10 lakh. Okay, that is not increasing. So this first statement is totally false. Now let's see the first statement. The issued capital will increase but the authorized capital will remain the same. Yes, because we are issuing less than 10 lakhs. So we are not changing our authorized capital. That is also true. And with this, we are increasing our issued capital. That is also true. So the correct answer of this statement is A. This is how you need to evaluate. Okay, this is how you need to understand that what they are trying to ask. Like in this authorized capital, you cannot change authorized capital each and every time. Correct? We are only changing the issued capital. Okay, so the correct answer of this question is option A. Chali. So here is your correct answer. Here is your explanation. The company is allowed to issue shares up to a limit. It's authorized capital. You can maximum issue your shares up to your authorized capital. Correct? The issued capital will increase as more shares are offered, but the authorized capital will remain unchanged unless the company decides to alter in its memorandum of association. When we register our company, that time we prepare the documents, and one of the very important document of any company is your memorandum of association. That is your MOA. Okay, I hope you understood this. Chali, let's see the next question. ABC Limited issued redeemable preference shares on 1st January 2020 with a total value of 50 lakh. The articles of association permit the redemption of these shares under specific conditions as per section 55 of the Companies Act 2013. Let's see. A first option. The preference shares are issued for a duration of 15 years, which is within the typical limit for redeemable preference shares. Okay, second is saying for a specific infrastructure project, ABC Limited issues another batch of redeemable preference shares on 1st January 25 for a total value of 30 lakh with a duration of 25 years. The company must redeem a minimum of 10% of these shares per year starting from the 21st year. Based on this information, means based on your first and second option, which of the following statement is correct regarding the redeemable preference shares issued by ABC Limited? In this, they are asking related to ABC Limited Company. ABC Limited Company issues two types of preference shares. Both are redeemable preference shares, but in the first one, they are saying they are just issuing the preference shares, okay, for 15 years. And in the second, they are saying they are issuing again preference shares, but for infrastructure projects. So we need to find out that out of these two, which one is correct? Both are correct, both are not correct, or only one is correct, second is wrong, second is correct, first is wrong. We need to evaluate that. Okay? So before evaluating our answers, before finding out which is your correct option, let's discuss few things related to your preference shares, that too redeemable preference shares. You know what is the characteristic of preference shares? Do you know what is the characteristic of preference shares? They get the preference over equity. Correct? They are eligible to get the fixed dividend and they get preference over equity. At the time of liquidation, firstly we are going to pay off your preference shares. Correct? After that only we are going to repay our equity holders. That is the characteristic of preference shares. Now there are different type of preference shares. Cumulative, non-cumulative, redeemable, irredeemable. Correct? Now my question to you all is, which type of preference shares are not allowed to issue in India? Do you know that answer? Which type of preference shares you cannot issue in India? Which type of preference shares? Tell me. Okay, let me give you the options. Option A like cumulative, B non-cumulative, B redeemable, D irredeemable preference shares. Tell me which type of preference shares you cannot issue. You cannot issue in India. Cumulative, non-cumulative, redeemable, irredeemable, and the answer is irredeemable preference shares. Irredeemable preference shares means whose life is not defined, whose life is perpetual. Okay, so no company can issue any irredeemable preference shares in India. So in question they are already saying that it is redeemable preference shares. Redeemable preference shares means after few years you are going to repay all their amounts. Okay, so in these options there are two different situations they are giving. So now next question is, what is the maximum time limit? What is the maximum time limit? Correct Sidhu ji. What is the maximum time limit for which you can issue the preference shares? What is the maximum time limit? What is the maximum time limit? 10 years, 15 years, 20 years, 25 years. Generally, what is the maximum time limit of any preference shares? That is your 20 years. Okay, that is your 20 years. So as per your first option, they are saying the preference shares are issued for a duration of 15 years, which is within the typical limit for redeemable preference shares. What is your typical limit? Your typical limit is 20 years. Means you can issue this type of shares, correct? Means ABC issued correct type of preference shares and that is allowed as per Companies Act also. Now if we see the second, they are saying for the infrastructure project, ABC Limited another batch, ABC Limited issues another batch of redeemable preference shares on 1st January, that too of a total amount of 30 lakh with a duration of 25 years. So generally, maximum limit is 20 years, but if you are a infrastructure project company, you can issue for more than 20 years, but cannot exceed 30 years. But one more condition is there, that from the 21st year, you need to redeem at least 10% of that preference shares. That is the limit. Okay? So as per this, they are also saying the company must redeem a minimum of 10% of these shares per year starting from the 21st year. So that is true. They issued for 25 years, means that is within a limit. Along with that, they are also complying with this second situation, which is from 21st year, they need to redeem minimum 10%. So they are doing that also. Correct? So what is happening in this? Based on this preference shares, both the options are correct. Based on this, both the options are correct. ABC can issue for minimum 20 years also for normal type of preference shares, but for infrastructure companies, this ABC can also issue for more than 20 years, but maximum 30 years. So that is also within a limit, and also they are complying with the second option. That is, they need to redeem from the 21st year 10% minimum. Chali. So with this, let's check out the options. A, both batches of redeemable preference shares must be redeemed within 20 years from their issue date. B, the first batch of preference shares can be redeemed at the discretion of the company after 15 years, whereas the second batch must have minimum annual redemption of 10% from the 21st year onwards. ABC Limited can redeem the first batch of preference shares only after 25 years from the date of issue. D, the second batch of preference shares is invalid as it exceeds the maximum duration of 20 years for redeemable preference shares. Chali, tell me the answer. Which is the correct option? Tell me, out of the 4 options, which is the correct option? Yes. So as per this, your correct option is your option B. Okay. In first, they are saying both batches of redeemable preference shares must be redeemed within 20 years from their date of issue. No, that is wrong, because in the second option, we are issuing for the infrastructure projects, correct? So this is this A option is wrong. If we see the C option, ABC Limited can redeem the first batch of preference shares only after 25 years. That is also wrong. Fourth option, the second batch of preference shares is invalid. That is wrong. That preference shares are also valid. Okay. So the correct option of this question is your option B. Chaliye. Next. Here I have gave you the explanation that I just told you. No? Let's see the next question. XYZ Limited has provided the following information as of December 31st, 23. Total assets 12 lakh, total liabilities 7,50,000. Based on the balance sheet equation, which of the following statements is correct regarding XYZ Limited? Options are A. The equity of XYZ Limited is 4,50,000, indicating that the company is fully funded by its owners. B. The total liabilities exceed the total assets, indicating a solvency issue for XYZ Limited. C. The balance sheet equation is satisfied since assets equal to liabilities plus equity. D. XYZ Limited has no equity as the assets are equal to the total liabilities. Chaliye, so this question is from your balance sheet equation. This question is from your balance sheet equation. In this, they are giving you data, and from this data, we need to identify that which statement is correct. Chaliye. So tell me, out of the following statements, which statement is correct? Thank you, Sidhu sir. So, okay, as I can say, okay, A option is correct. So, in the first option, what is given? The equity of XYZ is 4,50,000, indicating that the company is fully funded by its owners. Okay, on the other hand, the total liabilities exceed the total assets, indicating a solvency issue for XYZ Limited. And third option says the balance sheet equation is satisfied since assets equal to liabilities plus equity, and XYZ Limited has no equity as the assets are equal to the total liabilities. So in this, what actually we need to understand that this is a question based on your balance sheet equation. Okay. So if you see the first option, what they are saying, equity of XYZ is 4,50,000. That is true. That is totally true. Because if you calculate with the equation, that is assets equal to liabilities plus capital. So assets equal to 12 lakh. Okay. Liability is equal to 7,50,000 plus capital. So if you transfer this 7 lakh to this side, your balance amount will be 4,50,000. That is true. Yes, the balance amount will be your 4,50,000. That is true. But if you read the second part, indicating that the company is fully funded by its owner, that is not true. Full amount of this 12 lakh means they are in this option, they are saying that next 7,50,000 is also funded by their owners only. That is not true. The company might be borrowed some amount, correct? Some amount can be of loan. That is what liability is, correct? So in this option, the A is partially correct. This option is partially correct because in this 7,50,000 is funded with the help of borrowings. That's why your first option is wrong. Now, if you see the second option, the total liabilities exceed the total assets, indicating a solvency issue for XYZ Limited. And if you see, that is not true. Your assets are more than your liabilities only. So, there is no issue of solvency. So, that's why this option is also wrong. If you see the D option, XYZ Limited has no equity as the assets are equal to the total liabilities. That is also wrong because 4,50,000 is your equity part. So, this is also wrong statement. If you see the third option, the balance sheet equation is satisfied since assets equal to liabilities plus equity. Yes, with the help of this equation, we know that capital is 4,50,000. So, this statement is the correct statement. Okay, so this is your right answer. C is your right answer. Chali. So you can read here also like option A is partially correct but does not indicate the potential liabilities of the company. Option B is also incorrect as the total asset exceeds total liabilities, and D is false because there is a positive equity value. That's why your correct answer is your option C, because that satisfies your balance sheet equation. Chali. Now, let's see the next question. ABC Limited issued 10,000 equity shares of 10 each at a premium of 5 per share. The shares were fully subscribed and the entire amount was received in cash. What is the correct journal entry to record the issuance of this shares? In this, we need to pass the journal entry. Option A, bank account debit to equity share capital. B, bank account debit to equity share capital to securities premium account. C, bank account debit to equity share capital account. D, bank account debit to securities premium account to equity share capital account. In this, we need to pass the journal entry. Chali. Try to solve this. For your exams, journal entry is also very important. Journal entry is very important topic, and for the journal entries, they can ask in the form of shares, they can ask in the form of purchase of any material, in the form of payments, they can ask in any form. So, be prepared with your journal entries, be prepared with the type of accounts. Only with the help of that, you can solve the journal entries. Chali, let's solve this together. So, in this, ABC Limited issued 10,000 equity shares of 10 each. Okay. At a premium of 5 per share, means total, they are issuing 10,000 shares. At what? At 10 plus 5. Now, 5 is your premium amount. This is your premium amount. And the shares were fully subscribed. Okay, and the entire amount was received in cash. They are saying the investors subscribed fully, means investors subscribed 10,000 shares and they received full 10 plus 5 in cash. So, what is the correct journal entry to record the issuance of this shares? As you are issuing these shares, you are receiving what? As you issue the shares, you receive what? You receive the cash, correct? You receive the cash, or we can say the bank. In our bank, we are receiving the amount. So, on your debit side, we are going to write what? Bank account. Bank account, because we are receiving the amount. And what amount we are going to write in this? What amount we are going to write in this? We are going to write total 10,000 shares into 15, because fully subscribed and we are receiving total amount in cash. So, 10,000 into 15. 10,000 into 15, that is your 1,50,000. Okay. 2. Always remember, whenever we pass any journal entry related to share capital or share issuance, we need to credit our equity share capital, and this equity share capital will show your face value. Means in this you need to show 10,000 into 10. That is your 1 lakh. Because we are increasing our equity. So as we increase our equity, we are increasing our liability side. That's why we are doing the credit side. And next we are going to write for the securities premium account of this 5. Means 10,000 shares you are receiving 5, that is 50,000. So this is your securities premium. And as per this, which is your correct option? Yes, your correct option is answer B. Your correct option is your answer B. Bank account 1,50,000, equity share capital 1 lakh, securities premium account 50,000. Okay. Now, let's check the next question. A company reports the following cash flows for the year. Cash flows from the operating activities 5 lakh, cash flows from investing activities 2 lakh, cash flows from financing activities 1 lakh. What is the net cash flow for the year? Sorry, this question is from your cash flow fund flow unit. You know that under cash flow we divide the activities into 3 parts. First is your operating activity. Next, in your investing activity. And third, in your financing activity. We divide our activities into 3 parts. Operating, investing, financing. For our day-to-day activities, we show under this operating activities. Correct? Under the investing activities, we are showing the investment amounts. Correct? And in the financing, whatever we are borrowing through equities, through preference shares, through debentures, we show it under financing. So in these 3 activities, are we showing credit transactions also? Tell me. If anything you purchase on credit, so are we going to show in this cash flow? Yes or no? Are we going to show the entries of any credit transactions in this cash flows? Remember, whenever any credit transaction is there, like we purchase anything on credit, okay, means we are going to repay after few months or after few days, then we are not going to show that transaction under cash flows. We only show your cash transactions. We show only which type of transactions? Only cash transactions in which your cash is coming, means cash inflow and cash outflow. Only these type of transactions we show under this cash flows. Remember this point. Okay, that under cash flows we only show the cash inflow and cash outflow transactions. If any transaction is related to your credit, like purchased on credit, you sold on credit any goods, then you are not going to show that transactions under your cash flows. Okay, chali. Now let's calculate the net cash flow for the year. So as you can see, cash flows from operating activities 5 lakh. Okay? 5 lakh is from your operating activity. Now, if you see cash flows from investing activity shows you the negative balance. Remember, if they are using the bracket, means that balance is your negative balance. That balance is your negative balance. Okay? And after that, third is your cash flows from financing activity. From financing activity means 1 lakh. So we are going to add this 1 lakh. Chali, tell me what is the net amount? What is the net amount? 5 lakh plus 1 lakh minus 2 lakh. What is your net amount? Your net amount is 4 lakh. So 4 lakh is your answer. 4 lakh is your answer. $5 lakh plus 1 lakh minus 2 lakh. This is your negative amount. Okay, 1 lakh is your positive amount. Remember, 1 lakh is not in bracket. That's why it is positive amount. 5 lakh is positive amount. Only 2 lakhs, which is in bracket, is your negative amount. So the ultimate answer of this question is your 4 lakh. Okay, chaliye. Now let's see the next question. A company had a net income of 1 lakh. It reported depreciation expense of 15,000 and a loss on the sale of equipment of 5,000. If the company had an increase in accounts receivable of 10,000, what is the cash flow from operating activities using the indirect method options? As I told you, no, net means after adding, after subtraction, what is in your hand. Okay, that is the net amount. After subtraction, after addition, what is your net amount? That is net, not average. Sorry. So in this, they want to know the cash flow from operating activities. You need to calculate net cash flow from operating activities. Okay, remember, under operating activities, we need to show only the cash flow. So if you find any non-cash transactions, you need to do the adjustments. Correct? Remember one thing, when you prepare the P&L account now, whenever you prepare the P&L account, in this you show non-cash expenses also. You do this entries, okay, of non-cash expenses. But when you prepare your cash flow, whenever you prepare cash flow, in that this non-cash expenses are not allowed, because we need to find the ultimate flow of cash. But under this non-cash expenses, there is no flow of cash. So we are not going to give this effect of non-cash expenses. Remember this point. Okay, please try this one. Please try this question in which you need to calculate the cash flow from operating activities. As they are saying, company is having net income. Net income means after addition, subtraction of incomes and losses, their net income is how much? 1 lakh. That is 1 lakh. Okay, in this, they reported depreciation expense of 15,000. This is your net income. Means in this already you subtracted this 15,000, but we need to calculate the cash flow. Now, depreciation is your cash expense or non-cash expense? Can you tell me that point? That depreciation is your cash expense or non-cash expense? What type of expense is your depreciation? What type of expense is your depreciation? That is your cash expense or non-cash expense? Depreciation is your cash expense. Correct? Yes? Correct. It is non-cash expense. Means if we have already given the adjustments of this non-cash, so we need to add back that. Correct? Because while preparing of this P&L, in this we already subtracted 15,000. Because after that only we are getting this net income of 1 lakh. No? After subtracting this 15,000, we are getting this net income of 1 lakh. So we need to identify the cash flow. Means we are going to add back your non-cash expense, that is your depreciation. Depreciation of 15,000. Next, loss on the sale of equipment of 5,000. Now tell me, loss on the sale of equipment of 5,000. There is a sale entry of equipment in which you incurred 5,000 loss. So that this loss is your operating activity. No, that is not operating activity. Every day we are not selling our equipments. We are selling our inventories. correct? Every day we sell our inventories, we never sell our equipments. We use this equipments for running our business. So equipment is your investment type of activity. So already there is a loss which you adjusted in this net income. Correct? You already showed 5,000 this side. But we need to show the cash flow. Means we are going to add back this loss also of 5,000. Now next, if the company had an increase in accounts receivable of 10,000, what is the cash flow from operating activities? Tell me. Now what we are going to do for this 10,000 receivable amount? Are we going to add this or we are going to subtract this? Accounts receivable. Accounts receivable means your debtors. Okay? Accounts receivable means your debtors. So in this they are saying the company had an increase in accounts receivable of 10,000. Means we are going to subtract that. We are going to subtract that 10,000. Chaliye. Now what is the total amount? 1 lakh plus 15,000 plus 5,000 minus 10,000. The correct answer is 110,000. Correct answer is your 1,10,000. Your A is right answer. Okay, because accounts receivable is your operating activity. That's why we need to give the effect of this accounts receivable. Accounts receivable is your debtors. Chaliye. Now, let's see the next question. A firm receives 1 lakh from the issuance of new shares. What impact does this transaction have on this cash flow statement? A. Increase cash flow from operating activities by 1 lakh. B. Decrease cash flow from investing activities by 1 lakh. C. Increase cash flow from financing activities by 1 lakh. D. No impact on cash flows. Tell me, when firm receives 1 lakh from the issuance of new shares, equity shares, when we are issuing the new equity shares, means we are raising through which type of activity? Operating, investing or financing? We are raising through financing type of activity. Okay? So in this, your increased cash flow from financing activity by 1 lakh, because as you are issuing new shares, you are going to receive 1 lakh in your firm. So the correct answer of this question is your option C. Correct option is your option C. Okay, this is very simple question. Now, next, a company declared dividend of 2 lakh but paid only 1,50,000 by the end of the year. How should this be reflected in the cash flow statement? A. Cash outflow from financing activities of 2 lakh. B. Cash outflow from the financing activities of 1,50,000. C. Cash outflow from operating activities of 2 lakh. D. No cash flow impact. See, in this company is issuing, company declared dividend of around 2 lakh. Okay, but they only paid 1,50,000. Remember, they want you about cash flow statement. That what is the entry under cash flow statement? A. Cash flow from financing activity. cash outflow from financing activities of 1,50,000, cash outflow from operating activities of 2 lakh. So if you check the question in this, they are giving you two data. One is about 2 lakh and next is about 1,50,000. So in which amount there is a real flow of cash? Can you identify that thing? In which amount there is a real flow of cash? Is it under 2 lakh or is it under 1,50,000? Yes, the real cash flow is only under 1,50,000. They declared it 2 lakh, but they paid only 1,50,000. Though it is financing activity for sure. But there is no cash outflow of 2 lakh because they just declared it. But they paid only 1,50,000. The real cash outflow is only 1,50,000. So the correct answer is your option B. Okay. Payment of dividend is not your operating activity. Chali. Now, next. Yes. XYZ Limited has 5 lakh equity shares outstanding and decided to issue a bonus 1:4. How many new shares will be issued? Options 1,25,000, 2 lakh, 5 lakh or 4 lakh. In this, we need to calculate how many bonus shares we are going to issue. Bonus shares means what? In which you are issuing new shares but not receiving any amount. Okay? In this, we are not going to receive any amount. We are issuing new shares without receiving any new amount. Means we issue bonus shares to always our existing shareholders. So, how we are going to distribute the bonus shares? In the ratio of 1:4. We read this as 1:4. For every one new share will be issued for existing 4 shares. This is what 1:4. If you are an investor who is holding 4 shares, you are going to receive 1 share of bonus. Okay? And how many total equity shares you have? 5 lakh. You have 5 lakh. You have total 5 lakh shares. So in this, we need to divide this by 4 into 1. Tell me what is the answer? Tell me what is the answer? 1:4 means for every 4 shares that you have, you are going to receive 1 equity share as a bonus. 1:4. For every 4 shares, you are going to receive 1 share. Okay? So 5 lakh total shares you have divided by 4 means 1,25,000 bonus shares you are going to issue. 1,25,000 bonus shares you are going to issue. I hope you understood this, that how to calculate the bonus shares. Chaliye, next. So correct answer is your 1,25,000 shares. Okay. So how many new shares will be issued? That is 1,25,000. This is your bonus shares amount. New shares they are asking. Okay. Next question. XYZ Limited has issued 1,000 equity shares with a face value of 100 each. The company makes a call on these shares. What is the maximum amount that XYZ Limited can demand in a single call per share? Tell me, what is the maximum amount that XYZ company can demand in a single call per share? Single call. What is the maximum limit? It is already given in your theory part. There is one line, single line, which says the maximum call you can do in a single transaction, that is no issue. So means after what I just explained you, I hope you understood how to read the ratio. I hope now you understood that how to read a ratio. In exam, they can ask this type of questions also related to bonus. Tell me, what is the maximum amount you can call in a single call? Do you know what is the maximum amount that we can call? Tell me. What is the maximum amount that you can call? No one knows this? No one knows this? See. Single call amount should not exceed maximum 25% of face value. Now can you tell me the answer? This is a line from which this question is framed. Single call amount should not exceed maximum 25% of face value. What is your face value amount? That is 100. And they are saying maximum 25%. Hana? Means 100 into 25%. What is your amount? A, B, C, D. 10, 15, 25, 50. As per this, 25. So correct answer is option C. Remember this line, single call amount should not exceed maximum 25% of face value. So face value is how much? Face value 100 each. Okay, and they are saying maximum 25% you can issue in a single call, means 100 into 25%, that is your 25 rupees. Maximum 25 you can call in a single call. I hope you understood this part. These are very important questions for your exam. Remember, not for only your theory side, but they can make practical numerical questions out of this also. So if you want to get more confidence, what you can do? You can enroll in your revision batches. So for that you need to visit to Adda247. As soon as you visit Adda247, this is your home page in which you need to click on all courses, JAIIB, CAIIB, JAIIB October 24. This both batches are your revision batches, but remember this one is your bilingual batch and this is your English medium batch. As you click on this, you are going to see the details like 120 live online classes, test series, ebooks, live and recorded classes also available in this, counseling, PDF notes. Along with this, doubt solving facility, experienced faculties are there. So you can enroll in this because now time is very limited. For your attempt, you require these type of batches. Correct? Chaliye. So how you can enroll in this? by using the coupon code that is Y895. As you apply on this, you are going to get the 79% off. Remember, currently we are providing you 79% off, but if you use the Adda247 app, with that if you purchase this batch, you are going to get additional 1% off. Means total discount of 80% just by using the coupon code that is Y895. And remember, this offer is limited. This offer will end today. So enroll in this batch, not only for your AFM, for your remaining 3 subjects also, you can use this particular revision batch. Chali. So with this, let's wind up this session. Thank you for joining. If you like this session, do like and give your comments that what type of more sessions you want so that you can clear your AFM in your first attempt. Thank you everyone.